Welcome back to the channel. The question today is, why are interest rates rising when the Feds haven't adjusted the prime rate? In fact, the Feds aren't even planning on raising the prime rate until March 16th. But yet, the interest rates have risen to 3.92% as of this recording. Do you know why? Do you know mortgage interest rates are not tied to the prime lending rates? Unless, of course, you're talking about an adjustable rate mortgage, which is called an ARM. Yeah, you heard me right. The 30-year fixed mortgage interest rate is actually tied to the 10-year Treasury bonds. Crazy, I know. Just so you know, I am not a financial advisor, and you should always check with a financial advisor or a mortgage broker before making any kind of decision. I'm a realtor, and if you're ready to look for your dream home, whether you need to move up or you need to right size, give me a call. I'm here to help you love where you live. For those of you who are in the market and are ready to purchase a house, stay to the end of this video and I'll show you a graph on how much you could actually save by paying a little bit more for the house now and less interest rate. For those that are thinking about buying a house, this is good information to keep in your toolbox. I would not panic. I would not lose any sleep over it. When you're ready to buy a house, we will see what you can qualify for, but there's no sense of buying a house if you can't afford it and you're not ready to be a homeowner. So don't freak out because interest rates are rising. As the graphs will show you, they always either rise, they fall, or they go sideways. That's all they can do. Do you remember back at the end of 2021, there were many news articles about the Fed tapering bond buying. What this really means is they are going to stop buying bonds. And the reasons the Feds are going to stop buying bonds is they need the interest rate to rise in order to combat the rapid inflation that we are all suffering from. Thus, the rates on the 10-year Treasury bonds started to rise, and shortly thereafter, as you will see in the charts shortly, the mortgage interest rates on the 30-year fixed started to rise. Now, the best indicator of the 30-year fixed mortgage rate is the 10-year Treasury rates. So, if you want to know what the interest rates are going to do, all you have to do is look at the 10-year bond rate.
All right, guys, so this is the macrotrends.net 10-year Treasury rate. So we're going to start here in the 70s, okay? Looks like we got a 7.99. Then here in 81, I think it goes up to 15.04. Let's see if we can get that up there. 15.05, sorry. Yeah, freaking high. Now, if you notice, this graph goes kind of a steep decline, then goes to gradual, okay? So from the 81s, going all the way down here to the 2000s, we're at 6.66, not a good sign. And 5.14 in 2007. And right before the pandemic started, looks like we were in the, 3.19, sorry. After we had all the money pumped into the economy, the bond rates fell to 0.64%. And now we are climbing back up because the Feds are tapering. So we're at 1.92. There we go. As of February 7th. You can see the mortgage interest 30-year fixed rate right there. And it only goes back to the 70s, so that's kind of where we started there. But I mean, we're still 7.5, 74 went up to 10.3. Freaking crazy. And, see that big spike? 18.44%. Now over here, you notice that it goes all the way up to 20%, and the other chart only went up to 18 because there's a spread built into what the Treasury rate is to what the interest rates are. Okay. So 18.4 in this graph is a little more gradual decline all the way through. If we, let's see here, 2007, 2006, we're in the 6.78, going down, kind of jumps back up right there. Let's see, 4.72 September of 2018. Before June 2019, we were still at 3.73. I wonder what March was. If we can find March, 4.06. It had already started going down. But the lowest point, let's see, that looks like 2.72% in November of 2020 for the most historic interest rates for a 30-year fixed. Crazy. And now, as of February 7th, we are at 3.92%. If you want to, why don't you share in the comments where you think the interest rates are going to end up? Because this is just the mortgage interest rate. Has nothing to do with what the prime rate is. But let me know in the comment section below what you think we're going to end up at. All right. I'll talk to you here shortly about the graph that'll be coming up. All right, y'all, we're talking about a $300,000 house with a 6% appreciation, currently at a 4.5% interest rate. If you wait until it becomes 5.5%, you're going to be paying an extra $275.52 per month. And over the life of 7 years, that's $23,144 you just gave away. So if you are ready, I would act now before the rates go up. Thank you for watching the video. Stick around for a couple bloopers, and I hope you have a blessed week. Make sure you comment, like, and subscribe. We'll talk to you soon.
The rates on the 10-year mortgage. Bum, 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 bum. You will see in the charts. Ow, I got you. Started to rise. Let's start that again.